Morning, welcome back. Nice day yesterday, right? Nice down day. I thought yesterday was a pretty dangerous day to be involved in on the trade side. But I think it gave us some pretty good information as far as what to look for going forward. So, as I start off, I want to start with the ES. Obviously we had a big weekly gap down, open on a Monday down, somewhere in around 40, 45 points in that range, which is a pretty sizable gap. Now, they tried to open and really start to get this going. But early on, after C, D, and E had the rally, it really looked like the opportunity would be there to buy for a relief rally late in the afternoon. Given the fact that you went 6 wide, fairly early in the Globex session, in the first 2 hours, and that generally will lead to a balanced day, right? As the market trades through. And you have that kind of relief, that's not usually going to set up for a trend day that's showing a lack of interest on the sell side. And then you really saw that as the sellers really pushed into this 20, 25, 29 area, which keep in mind your 50-day moving average at the time was sitting somewhere in that range, about 29 or so on the daily. So, they found that supportive bid. The sellers tried and tried and tried and tried, and they could not, push through. Now, one of the things that was most interesting, I think, as this selling was taking place, although volume was higher yesterday than what we had seen Friday on the NYSE itself, after you got through, the A and B periods, which A was significantly higher, B was continuing that kind of trend. Once you got into the C, D, E, F periods, you started to see a real taper in volume as far as how the market, how much volume was coming into the market itself. Now, it was still doing more volume than Friday was. But in relation to how it was building, you were actually losing significant steam. So something you want to always pay attention to is volume. Volume measures the move, right? Volume is your measuring stick, really. It just tells you how good of a job they're really doing based off of how much volume's entering the market. Super high volume more than likely will favor a stronger sell. Super light volume will allow, the Momo retail type trader to be more involved and have a more, successful buy the dip kind of campaign, which is really all they know how to do. So that was a little nuance that I picked up. I already mentioned that to the guys in the room. And then you had this late, kind of blowout of all these shorts who just couldn't get anything. And then, of course, being a Monday, you have options that expire on the weeklies. So, I think a lot of that comes into play. But that 42.50 strike obviously is going to be quite strong. Now, something I had said to the guys in my room yesterday was I would not be shocked if we gap up today. And I won't be. I still won't be. We may not, but especially in the RTY when we get there. The reason for that is there is a ton of buyers that just bought the 50 because that's what's worked over and over and over and over again. And I definitely don't blame them. I think that was the right move to take. What I will be looking for today is 4290 to 4300. That is an area of interest to me. That is the area where I believe the potential is for a rally. Now, if we rally up to that level, I want to monitor it. The reason I want to monitor it is I don't believe the sell itself is over. I think this is nothing more than what would be a natural relief rally, right? Keep in mind, you had the down day Friday. You had a big gap down into the week yesterday. Weekly gaps generally don't hold very often. So if they push it up into this range and really make a run at this weekly gap, 07, 4290, those are two different levels that I want to monitor for the potential relief rally, and then from there make a decision. Again, I have no interest in buying or selling any of this right now. It's outside my strategy, so I don't bother playing with it. Now, when you're looking at the daily, if you've been following along here for quite some time, 100% there's one thing I do not do, and that is get super excited on the sell side below the 21-day moving average. I think that is deadly to do. Like I was saying, each and every time this market is sold off to the 50, boom, sold off to the 50 bot, down here, boom, 50 bot, down here, 50 bot, over and over and over again. It's the same trend, right? It's a continuation of buy the dip, buying at a very mechanical, very, very visual area. What you get is a strong recovery. Now, I do believe that if this comes up somewhere in that 43, 43.7, somewhere in that range, and they're able to find a seller, that could potentially be ready for the next leg down. Now, how far does that next leg get? I don't know, but I think there's a strong possibility that you could, retest somewhere below 4,200, somewhere in the mid 4,100s if they are to come back and try and find a bid itself. Again, keep in mind, this entire move comes up from a gap that we have never filled. And I mean, we don't really need to get into the structure of the market. It is complete garbage and has been for quite some time. But until you get a super strong catalyst, there's really no reason to get too carried away with thinking the market's going to crash. As I'm looking at the profiles for the ES, as this pulls back, this is really nothing more than a natural move. And here's the thing. If you follow any socials, most people were calling for this move to take place somewhere into that 42.40, 42.20 area, which was, of course, the value balance range that we had previously. This is a previous value balance range, a liquidation. And then, since that liquidation on these 3 days, the market really just went straight up until you had a little blimp here. So like I was saying, it won't surprise me, even with this very unfinished all-time high, if we pull up somewhere in this range, just above this 42.80 into the 4,300 area, somewhere in this range, and find another seller, to potentially bring this down somewhere into the mid 4,100s. Why do the mid 4,100s matter? It's an area, first and foremost, these boxes are balanced, right? This is an area of balance in the market itself. It's already worked as strong support once. I wouldn't be shocked if that's where they want to bring it down to rebuy for another leg up. And that's kind of what my thought process is for the ES, is to be patient, wait to pick my spot, and if it comes, swing some contracts or swing some options on that side. But we'll see. We'll see how the market opens and how it responds. None of these levels that I talk about are sell levels, right? I'm not a sell level guy. If that's what you want to be, if that's how you want to trade, that's perfectly fine. You need to just, strengthen your technical analysis and get some good trend lines, and then you'll be set. It's as simple as it is, right? Now, looking at RTY. So we talked about RTY yesterday. We talked about the fact that RTY is the only market that went full trend into a strong structural balance range. Okay, strong structural balance, made a high, made the low, retest the high, so on and so forth. Now, some people messaged me saying that they couldn't understand where the balance range is. I mean, I kind of tried to do it with the lines, but simply put, anywhere in here, you really could just call balance. Let me just get this colored up for you, just so it's a little more visually appealing to you. Doesn't matter what colors there, just need to be there. So that would be my balance range, right? You've looked above it a few times and failed. You've looked below it a few times and failed. That's what I'm looking for right now at RTY. Are they going to fail this time? Now, very, very rarely do you break from balance and just completely flush, and that's the end of it. The most likely move is to break away from balance, retest the inside balance, or retest the outside of the low side of balance. And then if the breakout's going to continue, you will make a new low past the breakout low. So if they're going to, flush this out, what's saying they can't make another run back up here between 2,200, similar to what I'm looking for in ES, come back in here, see if they lack that buyer, potentially position myself for a retest of what I think would be the 200-day moving average, along with, yesterday's low. Now, I am a firm believer the 200-day moving average should work as very, very strong support, given the fact that we haven't even come down to it in what seems to be forever, but in reality is, just under a year. I would be pretty far-fetched to say that I don't believe there's going to be a strong buyer at the 200-day moving average in RTY, even given the fact that RTY is so stretched out and gotten so carried away, and really has been the only market to find structural balance at the high, which again, like I said yesterday, is market reversal or market continuation balance. It is an actual change in direction or continuation in a strong direction of the market, meaning if this decides to go trend to balance to continue trend, you could very easily see a very similar move to what we saw in November, December, and January of this year in RTY, where we pretty much just went, boop, straight up in the price levels. But just as quickly, if they decide to break it to the downside, this could, come down exceptionally quickly and see a very similar downside move to what we saw on the upside. So very, very important reference to understand. Structural balance is going to make, or break this RTY. That's something I'm watching for early on. I definitely, even if, here's the thing with this move is even if this comes up to 22, it's giving you the option, right? It's giving you the option. Do I think this is going to V-shape? I don't really believe in that right now. I think this is a little different than what we've seen before. But if they do V-shape it, you're going to be wrong, and that's part of life. If they don't, they get a little more natural. Somewhere in that 22 area is a good pullback. Even if they pull back to 2160, 2170, 2150, somewhere in that range, all you're looking at that point is to see if they're going to reclaim the low of balance for support, or if they're going to flush that low and continue with the move. So it's going to give you an option. It's going to give you a pause, in my opinion, no matter how you position yourself. Just get that squared away there. So that's the day time frame. When I'm looking at the profile of R2Y, keep in mind R2Y is super mechanical, right? Super mechanical in nature, poor lows, poor highs, very, very normal. R2Y, made a real valiant effort at really getting up here and filling this gap. They came, a tick short or something like that on my tick settings chart. And then they fell back into balance. But what R2Y did that most markets didn't is it didn't continue off of the gap lower. It didn't have any really downside continuation. We do have some levels below us that I'm interested in. But, as this comes back up, I'm quite interested again, like I said, in that 2200 number. I think that's a natural move. I think it's a natural opportunity for them to push this market towards that resistance, and then we'll get a better idea on what R2Y wants to do. So that's where I'm at with R2Y coming in. I don't think it's tradable today, which is fine. They're not going to be tradable every day. And it's something, like the ES, where I'm more in observation mode. Now, looking at NQ, lo and behold, look what holds again, right? We've talked about this purple trend line over and over and over again, and the strength that this trend line holds. NQ is very similar to ES and R2Y for me. I'm looking for a retest of the 850, 840, somewhere in that range as potential pullback to fade. That's somewhere that I'm expecting to see a seller try and push in and see if they'll step in to get below this trend line. Now, keep in mind, I'm not a super trend line guy, but it obviously plays right now, so you might as well pay attention to it and use it to your advantage. So that's exactly what I plan to do. I think all three markets that we talk about usually in the mornings here, I think are all at very, very visual areas and very, very mechanical in nature. When I'm taking a look at, our lows on NQ, very, very, very weak in nature. This is not very common in NQ. Quite often you'll see this flush out. Likewise, they're trying to find support, in what was resistance. So, this is the area of most interest to me. 56, 72, similar to R2Y. This is where I would expect to see a seller enter the market and really push back on them. I think that the reoccurring theme here today is quite simply, I don't see many trading opportunities in any of the three markets, which is completely fine. I don't care about chasing volatility or any of that. Good for you guys if that's what you're into. That's not what's going to make or break you over the long term. So that's where I'm at on this day. With that being said, trade well, trade safe, and I will see you guys.